Welcome everyone to another True Potential Do More With Your Money podcast. This is episode 58 and we're recording this on Friday the 5th of March. And today we're going to be picking the bones out of the budget. We've had the roadmap, we've now had the bank statement. So all we need is the faintest idea of what any of it means. And to help with that, we've got the perfect four. We've got Neil Johnson, Daniel Harrison, Mark Henderson, and David Harrison. So Mark's got the markets, Neil's got the numbers, David and Dan have got the details. So good morning, everybody. How are we all feeling this morning? As good as that? Well, brilliant. Well, let's just get into it then. That's fabulous. Excellent. Thank you, Neil. Neil, you seem to have changed your usual backdrop. Normally we see you with your bookcase in the back, but you seem to be banished to some other location today. Is everything all right?
Yes, I've been banished to the attic, Peter. We've had a new cabinet put in, a bit of joinery work. We've got Steve the decorator downstairs painting away, so I've been banished up to the attic for the week.
I've heard Boris Johnson's looking for one of those, a new cabinet to be put in, but not quite yet anyway.
Yeah, you've got Steve the decorator in the trouble downstairs. He's probably on furlough.
Yes.
Better tell him he mentioned his name, otherwise that's it. Universal credit stopped.
As long as it's not Steve Hutton.
Well,
Neil, Neil, you should have rung me up if I knew, because there's a guy around here who's an ex-British Airways pilot. Obviously, he's not flying many planes at the moment, and he's doing decorating. I could have put you in touch. I don't know if he's any good. He does a good job on the landing, but apart from that, I'm not entirely sure. But I could have put you in touch. Anyway, let's. Mark, you're sitting there very, very quietly, Mark. So I'm going to bring you in and let you take over to restore some sanity. How did the markets get on this week then, especially in response to the budget? But where do we find ourselves at the end of the week?
I think, Peter, the budget's probably the least important thing as far as the markets have been concerned this week. On a global basis, what Rishi said this week, it'll have very, very little effect. And there's a couple of things I'll bring out in the next few minutes that kind of trump that. But I know that we're talking about the budget in some detail as how it affects the UK. But, the portfolios are invested across the world. So let's get on to see what has happened this week. And March started quite nicely, Peter. We had a good start of the month with major markets up. FTSE on Monday was up 1.62%, Euro stocks up nearly 2%. And in the States, the S&P was up over 2%. So we've got strong market movement across most sectors, including tech, which faltered a little bit at the end of February, and some stability in the sovereign bond market with UK 10-year gilt yields moving a little bit. There was some economic data that came through. US manufacturing beat forecasts. There's momentum building in the States. European manufacturing PMI was ahead of expectations. And the same applied to Asia, with South Korea at the highest level since April of 2010. Still coming through, though, there's some news about supply chain disruption. And this is something we've highlighted on the podcasts and in the weekly notes that we put out, with motor manufacturing particularly affected because of semiconductor shortages. Coming on to the central banks on the other side of the world, Australia left rates unchanged. And there's some comments from the French minister there suggesting that the ECB will react against what they could see as a rising bond yield. So that was Monday. Across to the States for Tuesday, Biden announced a deal that every adult would be vaccinated. They've done deals with Johnson & Johnson, Neil's company, and Merck, with extra funding to help production increases as well. So that news was greeted by the Texan authorities, who lifted the ban on masks. So there you go. In Germany, interesting, a contrast to what we saw in the States there. Germany have managed to vaccinate 6 million people. Now that taken in contrast with the UK, where over 21 million people have been vaccinated. And it's problems in the administration across, not just in Germany though, but across in Europe as well, because people are saying that they don't want the AstraZeneca jab. They're not turning up for it because it hasn't been signed off totally across Europe. But I think things are changing a little bit on that side as well. But it shows the contrast between the UK and Europe. Other things came out, global emissions have rebounded, and it's higher now than it was at this time last year. Three main areas that they're highlighting where emissions have gone up. Again, it shows that there's a return to some sort of normality, or China, India, and the US. And it's quite interesting when you look at other countries as well. In markets, it was a little bit mixed. Europe held on to Monday's gains. US, a little bit of profit taking. Tech and consumer discretionary areas were down yesterday. Down on what they were on Monday, but energy and healthcare were up, and there was further movement in the bond market, more of a stabilization. Economic data from Tuesday, Germany retail sales were down, but again, going back to Australia, retail growth was up, or growth across the board was up in Australia, 3.1% quarter on quarter in quarter four, driven by a fall in savings rates and consumption. Wednesday, a relief package in the States, $1,400. It'll be the third payment made, but there was a bit of debate around the income thresholds as to which families would get that. It's with the Senate for consideration, and they're hoping it should be passed by the end of the week. Now, last night, that whole bill, 628 pages of it, had to be read aloud, and it took nearly 11 hours. So when we wonder how things go very slowly in the States and go through the various houses, there you go, you've got an example. To read 628 pages, 11 hours, they finished at about 2 o'clock in the morning. So they're going to get up again after a couple of hours sleep and hopefully vote and get that done by the end of this week. Wednesday, we saw the budget. We'll touch on that a little bit later on and bring in everybody on that. Yesterday, we saw some movement in the market, a little bit coming off the FTSE, down by about 1%. This was driven by, Peter, was comments by Powell in the US, that the economic reopening could boost inflation, but they're saying there could be stronger employment, and it resulted in some selling of bonds. And it can be a case of, at times, that good news is actually interpreted as bad news, and some profit taking happens across the equity markets. Some people had hoped for a little bit more from Powell on that. Perhaps an increased purchase of bonds to keep long-term interest rates a little bit more stable. So there was some disappointment, not so much at the news, but at the wording that he used to announce things. However, some in the States regard the normalization of bond yields as a sign of healing, reflecting stronger growth expectations. However, as of close last night, FTSE 100 is up 1.2% on the week, so we're seeing some good movement there. A little bit of UK budget reflecting in the FTSE 250, the smaller companies, the more domestically focused index. That's up by only 0.5%, as opposed to 1.2 for the larger, more global companies. Bringing that into the true potential portfolios, month to date, I know we're in the first week, but the balanced portfolio, which is the middle one that we tend to use, is up 1%. On the date, on the year, it's up 8%. And as you get in the longer term, we're up 38% on over 5 years and 42% on launch. Now, just to complete where we are this week with the markets, a little bit of news this morning out of Europe. Germany factory orders are up 1.4% month on month in January. But in China, we've had the annual work report. Chinese growth target of 6% in 2021. Now, some people think that 6% is low. Contrast that with the rest of the world, and it's extremely high. And it's against a growth of 2.3% in 2020, which was actually the slowest Chinese growth that we've seen in 4 decades. But more telling for me, there's plans in this annual work report to create more than 11 million new urban jobs. Now that's significant in any scale, but also the Chinese government have pledged to promote business ties with the US as a mark of mutual respect. So we'll see whether that represents a softening of relations between the superpowers, and how that will reflect in market movements in the months and years to come. So that's where we've been this week, Peter, with the markets. And I think that I'll hand back to you, and you can coordinate this budget chat, which I'm really looking forward to.
Just before we get into that, Mark, he says with a tone of slight dread, you mentioned the US politicians there who've been reading or haven't they listened to 600 odd pages. There was a bit of good news for them. They could have a whiskey afterwards. And of course, overnight, the UK and the US have reached a deal on whiskey tariffs. Is that right? Do you know a bit more about
that? Yes, I did read about the whiskey tariffs, Peter. I thought it would be more appropriate to let you mention it, knowing that you do have a whiskey dependency. And it would be one of the first things that you brought out this morning.
Correct. Well, it's yeah. The Amazon man delivered a bottle yesterday, actually, just to celebrate. I saw that one coming. But that's a little example of perhaps what we want to see more of, isn't it? I mean, it's only on a whiskey, but it's exactly the kind of thing we've talked about on the podcast before about, that trade. Actually, it was interesting. I was talking about this with David yesterday about Donald Trump reared his head last week. And he was talking about some of the issues that you've touched on there, relations with China and China trade. And he was talking about how, he clobbered China with all these tariffs. And he was telling his audience that he'd taken all this money from China. And of course, he hadn't. What he'd really done was taken it from American consumers who are paying those tariffs. But anyway, I just thought it was a nice little note that at least if you've had to suffer 600 pages of a bill, you can look forward to a glass of whiskey, perhaps next time round, possibly slightly cheaper. Neil, we'll come across to you then. You know your way around a spreadsheet better than anybody, and you will have no doubt been paying very close attention to Rishi Sunak's Red Book this week and looking at those numbers. What particularly jumped out at you?
Well, I think, there's been a huge amount of coverage, Peter, and a lot of viewers of this will have sort of seen it all. But I think the big thing, obviously, that jumped out, and I was talking to somebody else who has a business, and he said, I sort of dropped my cup of tea when the 25% headline rate for corporation tax came out, because there'd been trailers of sort of 23% maybe over a long time. And when you've got this sudden jump to 25% from 2023, that is that's 30% more tax for any corporate, and also even things like introducing the lower rate, so it's still 19% as long as your profit's less than 50,000, and then it tapers up to 25. I just thought that that was a striking move, and I've been sort of crunching numbers, as you say, Peter, with spreadsheets and so on, but I still can't really understand it. Corporation tax makes up less than 8% of the total tax take in the UK. It's a relatively minor part, and yet you're going to increase that tax burden on industry, on businesses, every business, by 30%. And it's reversing a long trend here. We, go back to 2010 when George Osborne came in as Chancellor, the coalition came in, the corporation tax rate was at 28%. It was one of the highest in the OECD. And they set in place a track to say we need to bring corporation tax down. We need to get more companies coming here, inward investors, UK companies with an establishment paying corporation tax in the UK. So they set that out 11 years ago. And over that time, it came all the way down from 28% to 19%. And then one thing that shocked me initially was in December 2019, the announcement that the planned reduction from 19% to 17% was just cancelled, which, I could not understand that, because you could see we were actually coming to be one of the lowest corporate tax economies in the developed world. And you start thinking, well, this is really going to kickstart the economy, bring in more companies, bring in economic growth. So that was the first major surprise when that was announced just over a year ago. But then to go completely into reverse and jump the rate back to 25%, I think it's entirely wrong. That's what they've announced from 2023. And there was a good piece from Clifford Chance last night saying actually it's worse than that, because if you look on a like-for-like basis, the tax take across UK corporates, there are less allowances than in other countries, for example. So that 25% is actually a lot higher than most of continental Europe, North America, we're right towards the high end when you actually work out what corporates will be paying in tax. And I think, immediate reactions, certainly people who are thinking large corporates, multinationals thinking of coming to the UK, suddenly they've got this strong signal that this is going to be a high taxed corporate economy. And it's totally reversed, a decade of what to me was great progress, because I think if you've got growing successful businesses and growing profits, and you can see that your tax burden is decreasing as a business, there's such a positive message across the economy. The size of the pie is clearly growing. And if you look at the Laffer curve on this, which is, many of you will looked at Laffer curve, which is, perversely, often when you increase the rate of a tax, your tax take reduces because people's behavior changes to avoid paying that tax. You look at the Laffer curve over, 2010 to 2020, when the rate was coming down, the tax take shot up. It went up from about 30 billion at the start of that to around about 60 billion at the end. So there's lots of evidence over 10 years saying if you decrease the rate, your tax take has gone up. Conversely, increasing the rate, large corporates may well act, to move to mitigate or avoid that. So that was the big headline, Peter. I think the other aspects of corporation tax, clearly a lot of publicity around. There's the ability now to carry. Companies have made losses this year because of pandemic, can carry those back 3 years, but of course they're only getting relief at the 19% rate. And otherwise they can carry it forward, they'll get relief at the 25% rate. So there's a lot of scratching of heads. What's the right thing to do? Do I get cash flow boost because of the loss, or do I leave it and save money in future? And then of course the super deduction has had a lot of publicity, which is the 130% tax credit on investment activity, plant and machinery, and investing activity. And that one, you saw BT got a huge boost because they are spending billions, of course, on their infrastructure. They've now got a bigger bottom line overnight, but only for 2 years. So I think, the reaction generally from polls seems to be, well, this is quite a good thing, because I guess in general people think, well, it's at least I'm not being hit personally, because you've got to look at investments, you've got to look at pensions. Yeah. This is not a zero-sum game. If you're a large corporate, you've got 30% more corporation tax to find. You're going to cut the dividend potentially. You've got less money to invest. I just think it's a really, hugely negative move. And I think, as a concept, I don't understand, and I don't even think it's going to work. Actually, I don't think they will raise much more money, if any. And as I say, it's a very small slice of their tax revenues in any case. Yeah.
The politics of it's interesting as well for me. Deferring it for 2 years to 2023, which is, by the time that comes in, April 2023, you're 1 year from an election. So to do that to the core business vote, which the Tory party would normally expect to get a lot of, the timing doesn't seem to be politically very savvy. So let's we'll see. But was there anything else that Jim? We'll explore a bit more of that shortly. But was there anything else, Neil, in terms of you talked about the growth figures and the scale of the sort of debt the country's in, but of course with interest rates being so low now, that's perhaps not so much of a concern. I think I read some articles that Boris doesn't seem to be too bothered about, stacking up the country's debt because interest rates are so low, and it's fairly, as long as they stay low, you can service it. What were just for our audience, kind of what is the position in relation to that?
Well, I mean, you got more than 2 trillion of debt, so we've gone through 100% of GDP in debt, which is, it's as been publicised, that was the late 1950s, early 60s since we've been at that level in comparison to GDP. So, there's inevitably some concern about that. Right now, they're financing it at incredibly low rates, but there must be a concern that over time the rates gradually increase, inflation may come back, so you may find that as the debt rolls over in years to come, that the rates are much higher. We've had a bit of a windfall, many billions, probably 25, 30 billion of lower interest over recent years than we would have had. So there has been a benefit there. But closing that gap, I think the other idea in the budget, what we call fiscal drag, which is where you just leave personal allowances where they are, and a lot more people come into income tax. So around about 1.3 million more people who currently are below the minimum threshold will start paying income tax, and about 1 million people who pay standard rate tax will also start paying some of the 40%, the higher rate tax. I don't think that's a bad idea, because it's a gradual increase. There's a gradual shift and extra income tax, but nothing, nothing that's necessarily penalising one group of people or one sector. It's across the board. Everyone's just going to be paying a bit more. But I think what was quite, surprising in the figures, if you look at the overall tax take working through this plan, it shoots up to 35% of GDP. So, you're actually getting a big increase from around about 31% to 35%. And the stats are saying it hasn't been at that level since 1967, 68, when Roy Jenkins was the Chancellor for Harold Wilson. And at that time, the economy was, coming off war debts and other things that, and starting to be able to reduce tax after another crisis. And I think it's, it's interesting that they obviously feel they have to get the tax rate up and the tax take up. I'm very surprised they didn't look at things like fuel duties, and taxes, and duty on alcohol. We'll freeze the fuel duty for the 11th straight year since Gordon Brown did it to avoid a bunch of truckers who were blocking up the motorways. If there's something environmental, well, why not you have to actually block the increase in fuel duty every year. Otherwise, there's an automatic increase with inflation.
Yeah.
We'll not have that.
It did seem like a strange.
There are other areas, Peter, I think they could look at that would, again, be fair across the board and wouldn't necessarily hit business so much, and would raise, measurable amounts. Fuel duty is about 4% of overall tax take. So, there's a bit there. There's alcohol duties, and of course they're completely hamstrung because they said in their manifesto they wouldn't touch income tax, national insurance, and VAT rates. So they can't even sort of tweak something. And these are the big, those three together make up 2/3 of tax. So if you make a very small move there, you can potentially collect a lot of revenue. So I think the struggle for them is they've obviously set this 35% of tax every year to try to bridge that big gap. How can that be made up, without damaging recovery and damaging economic growth? And for me, they've come up with the wrong answer. That's my take on it. Yeah.
Neil, I know you're upset, but there's no need to swear on a family podcast. I mean, it was truckers you said. Sorry, I apologise. But it's interesting how budgets tend to unravel quite quickly. I think certainly in recent times, if you look at, go back to Gordon Brown's time, and do you remember there was the 10p tax that unraveled pretty quickly, and then George Osborne had a few of them, didn't he? He had a caravan tax, the pasty tax, and there was there was another one as well that momentarily forgotten. But then Philip Hammond had was it the national insurance on self-employed? I think there was some he had reversed that. And I can see Rishi's already in a fight this morning with the nurses over a 1% pay rise. So anyway, there you go. Let's want to bring in Daniel, thinking from True Potential and a business point of view. I mean, a lot of this gets talked about and it dominates the news, but I guess from a business point of view, apart from the point that Neil's just made, which very much does hit you square in the eyes, a lot of it probably, if you like, just washes over and you just kind of get on with your job. But I was struck when I was watching the budget by something you said last year on a podcast, and I tried to go and dig it out. But you said, and I'm going to quote you here, you said something like, we'll get our thanks down the line with a rise in corporation tax. Thanks for, keeping everyone in work, nobody furloughed. In fact, more people recruited, added to the bottom line in terms of headcount. So you were absolutely right. Must be a bit of a kick in the teeth, frankly.
It would be a kick in the teeth, Peter, I think, if we hadn't all seen it coming. I think this is part of the issue as well. This has just been an inevitable and probably really unimaginative budget from Sunak and the team. I think, of course, nobody's denying the fact that the amount of kind of state aid and support which has been put in over the last 12 months has to come from somewhere and has to be paid from somewhere. But there's more than one way to skin a cat. There's more than one way to repay debt, or put it down the line. I think Neil was talking about war debt and things like that. That was a potential option, but he's just kind of gone for the lowest common denominator, which is let's let's tax the organisations, those big faceless bad corporations. Even with the rhetoric where you're looking at, well, if you're a small firm below £50,000, you'll pay less tax than a larger firm as it tapers up, as Neil was saying. That to me shouldn't be what we're getting too political. Shouldn't be what a conservative government should stand for, to be fair, which is the more successful you do, the more we're going to tax you. Yeah, no, thank you. What that'll encourage, the same way that it encourages with individuals, by the way. So the more, there's this thinking, which again Neil was talking about, which is the more you tax the wealthy individuals, the more they will then just go to tax advisors and look at ways to mitigate tax. So if you think that private organisations aren't this second looking at ways now in which to mitigate paying this super new rate of tax, you'd be foolish. Expect a range of organisations right now to be setting up smaller subsidiaries there to get their just to spread their tax around, because they can afford to do it, because they've got the staff and the resources to do it as well. So yeah, to go back to last year, Peter, to me as a shareholder of True Potential, not even as a chief executive, it's unfortunately no surprise at all. But it does still feel like a kick in the teeth, which is well done for having a great year last year, True Potential. No, thank you. Not even any mention in his commentary, by the way, about thank you for staying fully open. Thank you for continuing to pay all the staff. Thank you for not taking any state aid or grants. Thank you for paying a record amount of tax, which is what True Potential did in terms of corporation tax, but also in terms of national insurance contributions, and also growing our workforce and the amount of income tax they therefore pay. Thank you for all of that. Let's put your tax up over the next couple of years there. So feels like you've been punished for being successful to me. I think probably the other thing really, if I keep my True Potential hat or business owner hat on as well, as Neil says, some of these organisations are now staring at a 30% tax bill increase from there. I think Neil mentioned maybe that means that maybe dividends have to be cut. But if you look at some of the organisations which, Mark and Jeff and the rest of the investment management team talk about, there was a lot of dividends cut last year when you look at the larger PLCs. So there's a hunger to get these dividends back, not just for private investors, but also for a lot of the institutional investors as well, who need dividends to kind of top up pension funds, etc. So yes, dividends may be cut as a result of the 30% tax increase to these larger organisations. But probably what's more likely is that staff wages will be frozen and investment could be frozen as well. So for a government who talk about let's spend our way, let's grow, let's use money to grow, this feels like a real about turn to me.
Yeah, I think that's probably a view shared very widely. Just a bit more positive news then, Daniel, while we're talking to you. Just tell us how True Potential has done. We're two full months now into 2021 and a few days as well into March. So business looking up, going up?
Business great, yes. January was our second best ever month for business, and that was quickly eclipsed by February, which was our second best ever month for business. So we had our best ever month in October 2020 in terms of new clients and new investments and pension money being invested with True Potential. So we've still got to beat October last year. But considering obviously January, February tend to be quieter months, they're really optimistic about that, really. Everything looking excellent. We could I was laughing with Mark. Well, I wasn't actually laughing. I was moaning with Mark Henderson last week, because what's happening as well with markets at the minute, we're having such a fantastic month in terms of growth and in terms of optimism. And then the last 2 months, both January and February, we've had this like silly type of sell-off in the last couple of days, which is quite frustrating to see, because what we really want our clients to do is look across a full month, just because it kind of makes sense when you look at a calendar and bank those great gains from there. So what I'm hoping for March is that we don't get the silly end of month sell-off. We see the sustained growth which Mark's talking about throughout the month, just to give everybody this more steady increase in their investments.
Okay, thank you, Daniel. David, you've been waiting very patiently. I wanted to just show our audience something which does tie into the budget. It's a very interesting report that's available online and possibly even in some good bookshops. It's a report called The Great North Freeport. I'll just put it there so people can see it. It's a very interesting document written by a chap called David Harrison, in fact, in 2017. And in the budget this week, there wasn't one Freeport announced, there was 8, but one of them was, in fact, that one there on the front cover, which is on Teesside. You wrote that report. You have spoken many times on the podcast about Freeports. If we're looking for at least, or perhaps the only, if you like, highlight from the budget, that would probably be it. Would you agree with that?
I was going to kill myself. Mark was getting excited about markets and that. Mark, you spoke for 15 minutes non-stop. I think that's great, showing your complete understanding of markets and complete ignorance of people going off. Get a move on. Daniel's going to kill Rishi, I think, and it looks as though Neil Johnson's going to hit him over the head with a spreadsheet. Which would be a shame, really, because Rishi, I think, like you, I think there's a kindred spirit there between you and Rishi, Neil. But the difference is you've got a real worldness about you. You've been, you know what it's like over the last 25, 30 years. Together, we built businesses and employed people and had to work with people. So. That is something which isn't always apparent when you look at a budget that we saw this week, which was a strange budget. I'll come to Freeports in a minute, Peter, don't worry. It was a strange budget because it was such a mixture for me. It's worth having a bet, and indeed I might actually have a bet, that we will unwind the 25p in the pound situation before they come to market. The thing that we've talked about this week, Peter, you and I, was the fact that if you're trying to get a 13-point lead in the polls, which is what they've got as a result of this budget, it's about making people feel, well, it hasn't really harmed me. It's harmed me a little bit. I don't really feel it, and it's fair. And Rishi said he was being honest, so that'll do, and it seems to have worked. That you can't be in government without a majority, and Boris must be feeling a little bit, more relieved than he has been throughout last year because of this. I think the thing which is hard to tell, Peter, with this. Is whether or not it will put off people, large employers, because UK needs some large employers coming in. Another Nissan, if it just be a little bit parochial at the moment, when we talk about Nissan, Hitachi, firms like this, which made a huge difference to the areas in which they came to. A huge difference, not just in terms of direct employees, but as we know, the indirect effect, which is at least as big, if not bigger, on those local economies and local social structures. Now, that's the gamble I think that Rishi's playing with, as to whether or not, because of our Brexit status, which is allowed us to have Freeports, are we really open for business? If you contrast us with an economy a seventh the size, or 7 times larger than Republic of Ireland's economy, they've got a 12% corporation tax rate. And I know when I did a talk a few years ago up in the west of Scotland, and the people there were bemoaning the fact that it had about 3 large firms about to come to them, and the Irish had pinched them, to use their terminology. Not only lower tax rate, like nil tax for a period of time, and they couldn't understand it how Ireland got away with that by being part of the European Union. And I said, it's dead simple. It's the Irish get away with everything. Everybody likes them, and apart from some people in Northern Ireland don't like them. But they who could fail to not to like an Irish person, but they're quite cute when it comes to that, and that shows the power of that, because some of us, me included, I believe there should be a zero rate of corporation tax. Okay, and I'll tell you why. Neil mentioned, these corporations, including us, can afford, we don't want to, but we'll have to pay for, barristers and other people to work ways out to avoid paying unnecessary tax. That doesn't mean we put the money in our own back pockets. What it means is, in the end, you have a profit, a bigger profit, but a bigger share of that profit goes back into the company. In our case, it's not in the machinery and plant, so we have to work through what it really means for the super deductible situation. And, Rishi obviously is trying to get some. He did mention that he feels that large companies have a big pot of money ready to invest right now. So come on, corporates, get invested in this money, you get 170% credit. Fine if you've got that money, and fine if you've got your eye on something. But yeah, I think this is a problem I've got with economists in general, that they very rarely, as we see, live in a real world. They live in a world of spreadsheets. They live in a world of hugely complicated and complex models, which clearly don't work. It just doesn't work. Otherwise, the whole world would be a beautiful, well-balanced economy all of the time. Because, nobody works in the Treasury who doesn't believe that what they've done will work. Yet it doesn't. And nobody's ever worked out why. The reason is you're looking at it. There's a human involved. So people have a way of changing these things around. Back to Freeports. His budget had one or two things. From a northeast point of view, it had a couple of things in there. The movement of the Treasury up to Darlington, which is where Neil came from, and which is interesting because we think that Neil should become mayor of Darlington. And I think that's what's happening in the background there. He's getting that's his changing room to get his robes on, ready to go downstairs, get his cocked hat on. But yeah, I don't know even if there's a building in there. There's a good big football stadium there. That idea, and if we could then link that to some form of educational campus, maybe link to Durham University, which isn't too far away from there, or something of that nature where we can grow our own Treasury nerds. At least they will be able to maybe add up and certainly be able to understand complex models and hope that what they're doing will balance the books. The spectre in all of this, for everybody who's watching, really, what's behind it, we believe, is a fear of inflation. So, which could be brought on by Joe Biden wanting to give away everything in the world to anybody who he can think of. I think he's forgot he's won the election. He doesn't need to keep making rash promises. So, and we should remember this as well, Boris. You've won an election. It won't be votes it'll cost you. It'll be corporates not giving you any money. That's what will happen unless you're careful. But the Laffer curve, as Neil says, I doubt if you'll take a penny more in tax out of this. but the problem is it's a signal. So it's a signal to the UK population that corporates have to pay their share, more than their share. Well, fine, then if that's got your 13-point lead or whatever, and you come across as being fair, and you come across as being a party that isn't a big business, I think you just got to be wary. And I'm sure they are. I'm sure they kind of know what they're doing. That they don't turn off the next 2 or 3 or 10 or 20 or 30 big companies that will come, who wouldn't need a Freeport, but would be very attracted by Freeport. There are 3,500 Freeports and growing throughout the world. There are, I think there's about 400 of them, about that 400 to 500 of them in the United States alone. Nissan has one of its biggest plants on earth in Tennessee, which is in a free trade zone or a foreign trade zone, I think they call them there. So interesting, a really interesting concept. Teesside have done very well. There's a lesson to us all throughout the UK, Scotland, Northern Ireland, Wales, everywhere. There is a lesson there in what has happened on Teesside, where you've had some sensible politics have gone on over a period of time, not spitting on politicians as they come north to have a look around and find out what it's like up here. They have welcomed them and they have played the game. In Darlington, you've got a Tory MP, Peter, down there, who's a fabulous man, fantastic gentleman, and make a fantastic MP. He and Ben Hutchin, and people down that neck of the woods have done a really good job in portraying to government that we know what we're doing. We're all about jobs. So I just want to finish on that bit. Yeah,
David, just if you wouldn't mind, just explain what the Freeport is, or what the advantage of it is for people who perhaps have heard a lot about it this week, but wouldn't know what the point of it.
The Freeport is a zone of land. These days it could probably be a virtual zone, but it's, just think of it in traditional terms, a zone of land which is inside the geographical borders of the country. So it's inside the UK, but outside of the UK for customs duties, just for tax. So the customs, if you like, border is on the outside. If you just want to draw, a kind of ring around a Freeport zone, it's inside the UK geography, if you like, but outside of it in terms of taxation. So you can virtually inside that, different zones throughout the world have different characteristics, but that's typically it. So what that would mean, Peter, is things right now is across the borders. We can see that happening because of Brexit and so on. As things are coming across the border into Britain, and we're still into Northern Ireland, which is a bit of a mess. The tax, now you can call it a tariff, it's just a tax. Everything where they're saying, we tax that. Well, it's a strange thing. If you were to bring in, if you like, parts for a tractor, for example, and then assemble that tractor, the amount of tax that tractor would generate is less than the parts. It's called inverted tariff inversion when that happens. So there are lots of ways where you could simply have zones where you are assembling things, and then as they came into Britain, there was less tariff on it. I mean, the key to this, by the way, is to have one great, big, huge Freeport called United Kingdom. If you just drop your tariffs on everything and get on with it and stop protecting things. People are ignorant of what tariffs do. They were ignorant of the agricultural policy, which is fine. That's fine if that's the kind of Britain you want. I'm not complaining. I'm one of 67 million people. But there's a price that we all pay for protecting somebody who's doing something which is uneconomic. Now, I'm not saying you should buy everything from China, because I think there's a little bit more complication in that, Peter. But the Freeport gets around that. So the Freeport in T-Sport. T-Sport's one of the deepest ports in the world. It can take the biggest shipping containers in the world. Without any problems in there. Around there, you could have we will have a Freeport zone. But the idea of that will attract freight there. I mean, the UK has got a huge amount of seaports, and most of them are privately owned. So they're not there for fun. So we've got more than one Amsterdam or Rotterdam. We've got scores of ports throughout the UK. I kind of fancied Blythe as being a free port as well, but I don't know why they didn't get it.
Didn't get one in this first round, but
no, I don't know why. Well, I can guess why, but they maybe wanted to try it out to begin with. But we can't hang around with these things. The UK Vault factory going in there is already beginning to transform how people look at that area. But one final thing, Peter. My wife I took my wife to the local Nightingale Hospital, which is just north, about a mile north of the Nissan factory near Sunderland. Near Washington. It's near Washington, Sunderland. And the amount of land around there, which is laid out ready, for inward investment, in some warehouses and factories, including the thing which has been turned, hopefully temporarily, into a hospital. So we're ready. Britain is ready. With Freeports, that's another big step in the right direction to be a free trading operation. And as I say, people just have to remember there's a huge amount of money gone in to make people not feel financially uncomfortable because of the pandemic. I agree with Danny, by the way. When you buy a house, so you borrow money for a mortgage, don't you? You go, oh, you have to pay that back next 2 or 3 years. No, you don't. Never pay it back. Let your children pay it off. As long as interest rates are handleable, there's nothing wrong with debt. Nothing wrong at all. Otherwise, you'd have no businesses. Credit is a keystone of financial growth. Ready credit, the ability to raise money, sets the UK apart from Europe, USA apart from the world. Our ability to raise money, normally for entrepreneurs, which is about remortgaging their houses, has made a dramatic difference in the amount of new businesses started up.
Yeah. Mark, just wanted to bring you back in on a point David made there when he was talking about Freeports and just generally investment into the UK. At what point, if you were a client watching this, a client of True Potentials, and you're invested in the portfolios, that's good news for clients. The UK being more competitive and companies investing in the UK, ultimately down the line, is good news for our clients, right?
It has to be, Peter. The UK market itself has been unloved for many years, as focus has been quite rightly on the Far East and the US, and to a certain extent that will continue. But with prices where they are in the UK market, the UK company shares, it represents an opportunity, and we have to be strong economically, otherwise it becomes much less attractive. And I think that turning it onto the clients themselves, what should they be looking at? The budget itself, Neil was speaking about personal tax there, and that's probably the biggest net gain for the Chancellor will be the 19 billion that they'll get by freezing income tax allowances. But what hasn't increased is people's ISA allowance, Peter, the amount of money you can put into a pension. But that's really what you've got to look at. Look at what you've got in front of you. Take advantage of the tax breaks that you can get as an individual, and make sure, particularly at this time of year, that you've used your ISA allowance and you've used your pension allowance, and put that money aside. Let it grow in a tax almost like a Freeport, if you like, with a personal Freeport, which is your ISA and your pension allowance. Let that money grow tax-free. And we'll look after it and we'll invest it globally. And when we think the UK is the right place, we do think it is at the moment, Peter. We're putting money into both FTSE 100, FTSE 250, the smaller companies, and to a certain extent spreading that across the all share as well. We will invest. We'll invest around the globe, because that is really what it's about now. And I started off by saying that the UK budget, it means very little to global investment. It's not the event that it used to be. Yes, we talk about it as we have done because we're sitting in the UK, but somebody in the States, it would probably pass them by. And David hit on it there about trade. That's what drives the economies. That's what drives global economies. And as long as we can get as much trade possible flowing through the UK, that can only be good for investors.
It's a great point you make about the ISA allowances as well, Mark. I mean, we're into the last month, if you like, of this this tax year. So anybody who's not used up their ISA allowance, you should definitely make sure they do, and not least because it's not going to be increasing next year.
That's
the
right.
threshold isn't going up, so absolutely make sure you use every pound you can. And Daniel, to bring you in again, thinking from clients who might be watching this, especially new clients, you talked earlier in your piece around how True Potential's grow, and what that really means is there are thousands and thousands and many thousands of more clients who are True Potential clients now who weren't previously. So this could well be their first podcast or an early one. So just to pick up on Mark's point, if they're wanting to use their ISA allowance up, what's the easiest, the best, quickest way for them to be able to make those adjustments to their ISA and top it up before tax year end?
The easiest way, Peter, for both their ISAs or indeed their pensions as well, is to log into their website or to log into their app on their mobile phone and Impulse Save. So for a new client who isn't aware of Impulse Save, it's a world exclusive for True Potential. Nobody else has this, only TP clients. Gives you the ability to log in and using a debit card, make a micro payment, or could be a large payment as well, but a micro payment is anything from £1 upwards directly into your ISA or your pension. What else does the app let you do? It'll let you track the performance if you've set a goal with your financial advisor or with a member of the central advice team at True Potential. What you'll have is a goal line against your actual performance line as well, so you can see, are you behind on your goal, or are you indeed ahead of your goal as well? So for people who are ahead of the goal, obviously you may want to keep investing. If you're behind the goal, you may want to bridge the gap to goal from there. So anything from £1 up to £99,000. Obviously, you've got to stick within your tax limits for that particular year, but the system helps you do that. You just use your debit card, the same as would be if you were buying something online. It's really simple. It's great to use. And actually, Peter, you were talking before about business successes in True Potential this year so far. February was our best ever month for Impulse Saves, on record. Nearly £22 million was invested by clients across the True Potential landscape for that. So I think that was about a 30% increase on looking back to this time last year from there. So more people are using this system than ever before to invest and to take advantage of those tax limits.
And Daniel, do you think some of that is because we talked last week on the podcast, and there was more news in the week about this idea that people have got loads of savings, because how else are you going to, have you been spending your money for the last 12 months, you couldn't go anywhere. So it'd be just worth reminding everybody that if they are sitting on cash savings that are probably getting absolutely nothing in the bank, before going and blowing the lot in some kind of splurge, you know, a bit of sensible put a bit of money away just in case we end up with another downturn in the future, which we hope we don't. But the Impulse Save's a great way to do that, isn't it? Just to quickly put a few pounds aside at a time.
It is, Peter. There's far smarter people than me can talk about this, but obviously if you're in a low interest environment at the moment, your money's effectively just sat in the bank stagnating, particularly if you then compare it. I know inflation's low, but we've talked a bit about this, but basically what it means is your buying power of that pound, which you've got sat in the bank at the minute, if it's not growing, inflation's going to overtake it, which actually means in essence you're losing money from there. So you need to invest your money. You need to spend your money in something which is actually going to grow from there. The other thing to mention as well with investing in a tax year is you can't do a degree with pensions. You're allowed to move your allowances around, but with an ISA, if you don't use it in that tax year, it's gone as well. So you're almost as good putting the money in, maximizing your ISA allowance now, and then if you need to take it out next year, at least you've banked that tax advantage there from there. What's also nice about an ISA, which not everybody also realizes, is you can take your money out of an ISA in a tax year, and as long as you put it back in that tax year, that's not lost. Whereas in the past, it used to be if you took the money out, it was gone. So there's a new bit of flexibility which came out a few years ago now in ISAs, which I think is kind of it's not necessarily appreciated by everybody there.
I'm going to come to. Sorry, go ahead, David.
Peter, one of the good things was that he didn't play around. Rishi didn't play around too much with pensions or ISAs, and he didn't increase the allowances, which is disappointing for some people. For most people, they're not using their allowances. So Daniel's quite right. There's a huge amount of money. I know the Treasury and regulator have spoken to us about this, about how do you, then they've ignored the advice, of course. How do you get people out of leaving money in banks and building societies? Billions, hundreds of billions, just lying around, sloshing around. The easy way to explain to anybody who's listening, who I'm sure if you are listening, you are more than capable of understanding this in any case. But if you begin the year with £100 and you put it in your bank or your building society, apart from it simply putting some black horse running around the television screen, or somebody being dead canny and from Yorkshire, from Halifax, what they're doing basically, you're just absolutely getting hammered. That money, by the way, that money, they put that to use. And by the way, that money that they can borrow money very, very cheaply indeed if they're a bank or building society. So you shouldn't squander your money in there. You don't put it in a cash ISA. That's even worse, because you're sheltering no growth at all from tax. There's a really pointless thing, a cash ISA. Make certain your money grows tax free. Well, it's not going to grow. You're getting 0.1% recurring of nothing. As growth, just no growth. So you start off the year with £100. Inflation's 2%. So a year ago you were going to buy something, a product for £100. You now go to the shop and you find it's £102. That's what inflation is. So that's 2% inflation. If of course your money's been growing at 1%, which you'd have to be a nerd to try and find out where to get that, but go looking for it. Then you've still not got enough money to buy that product because that product's gone to £102. So it's a thoroughly short-term money, of course, even in the bank or building society. But anything in that's going to, you want in 3 to 4 to 5 years time and onwards, you need to put it into what's known as asset-backed investments. Asset-backed investments. So you're investing in things such as stocks and shares, which are investment in real companies throughout the world. And we'll just leave it at that. Just you're investing in assets which can grow faster than inflation, and have done over the last hundreds of years. So, the investment industry and the whole risk-averse side of this, that can go down. Yes, it can go down in value, but as long as you don't cash it in when it's down in value, then you haven't done it any harm. When it comes back up, it will come up on average much faster than inflation, and on average many, many times greater than anything in a bank or building society. So you're right. It's a great saying that your own little Freeport. That's it. ISAs, I think they're a fantastic thing. absolutely fantastic. Everybody understands them. You know, just use them. Use that as your bank account. It's a fantastic tool.
It's like a free pot. A free pot of cash.
Yeah, I mean,
you could
even stretch it into a joke if you tried. But and you know, for hours you'll try and make that funny.
David, it already was to me.
Okay, sorry for. I'm just being rude. I should have laughed because that will tell the reader, the listener, that it was a joke. You see, you've got to. Yeah, I love ISAs. But I like pensions as well. I like anything where you're not being taxed twice. You've already been taxed money to get saving. You know, inheritance tax is another one where he hasn't done anything there. So it's quite for all the corporates can moan about the 8%, of tax delivered that way, and it's a 30% hike. Fine. I mean, the people who really are paying the money here, which is sensible, a little from a lot. If you get a little from a lot, depending how big that lot is, that's much better than trying to get a lot from a little. Okay, so trying to get a lot from corporation tax is trying to get a lot from a little. A little from a lot would have said, put duty up on things which are bad for you, such as diesel, petrol, or petrol, or booze, or fatty food, or whatever. You could put VAT up. It's not, sometimes you don't put it on, food and children's clothing, then you're not really doing anything that's socially horrible, are you? Anyway, that's me being a chancellor for a second. I wouldn't dream of saying I knew anything about it.
I want to bring Neil in, because one other announcement, Neil, as was mentioned earlier, was the not moving the Treasury, but bringing part of it, a campus, they've called it. It's a new word for a hub, to Darlington. So we've described what a Freeport is. What's Darlington to people who might not know?
What is it? Oh, where do I start, Peter? It's as David said, the magnificent Darlington Arena, formerly the George Reynolds Arena, is the real sort of jewel in the crown, I think, of the town. But no, it's a town which over the years has struggled. We had the Darlington Simpson rolling mills. We had Cleveland Bridge, which were the people who made the Sydney Harbour Bridge and the Tyne Bridge. So there's a long engineering tradition all the way back to the 1825, the first passenger railway. So when I was growing up in Darlington, an awful lot of people were working in the rolling mills and the steel mills, in Cleveland Bridge, big engineering works, and all of that has gone. There's practically no trace. There's the odd small engineering works. So I think the prosperity that was there, back in sort of 50s, 60s, disappeared with the end of engineering and that side of the industry. So it definitely needs that boost, and I think it'll be interesting to see how that works out. Clearly, the where they're going to build the campus right next to the railway station. So you've got the train from King's Cross, which takes longer now than it did in the 1980s to get from King's Cross to Darlington.
Maybe it takes longer than the 1880s.
It probably does, David. Maybe they'll upgrade some of that Victorian track, and we might get a faster train service all the way to the northeast when those mandarins have to get from London to Darlington in a hurry on a Monday morning and back on a Thursday afternoon, no doubt. But I think it's.
Can you imagine that, Neil? I mean, I'm not being cheeky about Darlington, but imagine you're like a Treasury official, right? And I don't know what. Maybe you're called Percy and your wife's called Lucinda or something like this, and you've been brought up in London, and you went to the same kind of college as you did. You went to Cambridge or Oxford, but not quite as bright as you, so they end up in the Treasury. And they go home on the night, and what kind of day have you had, Percy, darling? I'll just mix you a gin and tonic. Oh no, bad news, Lucinda. What's that? We're going to have to move to Darlington.
Yes.
Oh, Is that in Surrey?
Darlington. Yes.
Yeah. Has it got a parents and teachers group around it? Oh yes, it has. It's got places where you have free meals as well. There's all sorts of stuff. Some great attractions. It's only got, I don't know, has it got a soup kitchen there? I don't know. They'll have gone on with, imagine them going, Google Maps will be red hot. They're looking at it and go, oh no, look, it's north. It's north of Tottenham. Oh no, will we have to go through Tottenham to get to Darlington? But those buggers won't move up there. They're not going to move up there. They'll do what all these travellers do. They'll work out Thursday afternoon. I've got to be in London, so they'll have to be back down on a Thursday afternoon for London, so that they can have their Friday in their other office. So working from home. So the virus thing will help them. They'll be working from home in Hampstead or somewhere like that, or Islington or some other place where these denizens of the dark art of Treasury activities live. And that's why you do need a campus. Yeah, that's why you do need to grow your own. Try and make it a real thing.
Most of it's called a campus. It sounds trendy as well, doesn't it? So we can pretend to say Google or something where people can happy sack around there and like lounging around in the grass. So Google do.
There's no grass in Darlington. There's no grass.
It's scorched earth.
I've only been to Darlington to play football. Just in and out. It's
well, maybe the football team will make a comeback as well, because of course that's still languishing in the sort of Premier League, the Northern Premier League, the Premier League North, or whatever they call it these days. There's sort of many tiers down the leagues, but maybe with all those Treasury people coming up and standing on the terraces in the
people from the Treasury don't play football.
That's my point.
They'll play squash and things like that, and they'll go to work on their bikes and things like that. But good luck with that as well,
Yes.
There'll be people running all over carrying bikes on their back everywhere. They put their engineering uses to great use, their ability to remodel your bike for you. Yeah, it'll be interesting as to whether or not any of those mandarins ever see Darlow, as you would call it.
You can't imagine them standing on the tin shed at Feetham's in the freezing cold in the old 4th division.
The prawn sandwich and some champers.
Yes.
Yeah.
There is I'm told that the Darlington they're now playing at a rugby ground down in Blackwell, which is a sort of suburb of Darlington. There is a sort of VIP sort of corporate box, where you get pie and peas at half time, but it's just a kind of little shack on top of one of the little sort of makeshift stands. But I'm sure their day will come again.
Well, when you went to play football at Darlington, you got pies and peed on. You didn't get peas. I don't know. It's quite a nice town, Darlington. It's beautiful.
It is a nice town. No, I think it's.
Lucinda will be in shock. She'll definitely not tell her pals at the fitness class, or a yoga instructors. That will maybe come out that, we've got to move north. It's not even Edinburgh, It's it's in County Durham,
I know, just over the border. But just over the border from Rishi, of course. I was quite amused on the local news on Wednesday night after budget. They were more or less saying, "Oh, this Rishi Sunak is a bit of a local lad made good. He's just from Richmond. He's ended up being the Chancellor of the Exchequer giving this budget. Hasn't he done well?"
Yes, I noticed. He said yes, or he was announced yesterday. Nearly said, "I will be spending a bit of time in Darlington myself. At the Treasury." I thought, right, a couple of hours a week, probably on a Friday, just 12 till 2 before he gets the train down to Richmond. I would think.
Probably, Peter. Yes, I think so.
Good. Oh, well, the people in Darlington will be happy. You can go back there this weekend, Neil.
By the way, I think it's a great thing. I think it's a great signal. I know there's a bit of symbolism there, maybe. I don't know. I think if I came from Darlington, I would be really pleased with that. I think it's I think it's underlining we can joke about it. It's like, you know, like you can joke about yourself if if you're a Scot, you can take the mick out yourself. Everybody else does. Darlington to me has always been a slightly more genteel town than some towns in County Durham. It's it is a market town as well as an industrial. Yeah. Just the final thing, Peter. I mean that's the thing. It's whether or not. See, there's industry going on throughout the world. We're forgetting that. It's just because in the northeast we're used to not having engineering here. And it's when you go to the rest of the world, you see engineering all around you. You think, oh, that's strange. All we've done in the northeast lately is plant trees, which is great, by the way. But a tree doesn't generate much money for people. It doesn't generate many jobs, etc. So I'm hoping that this budget, although it was very mixed for me, I have to say, I think the intent is to try and generate. I think you just caught. Look, there's no doubt about it. This is a caring government, right? I think this government cares. Maybe you think, well, we're in the know. We know better than on the ground. You're wasting money giving it to that person or that person or that person. I think it's very difficult from a government's point of view to be so specific that only the people who really deserve the money get the money. I think in any civilization there's wastage, etc. For what it's worth, I wouldn't have prolonged it to September. I can't understand why you prolonged furlough till then. I think we need to get on with it. I think it's real life. It's been a pandemic. I think the budget, we'll see. It's obviously a popular budget, and I think that they're proving that they care about their people, which undoubtedly they do. Now, whether that suits everybody, so what? We're in a democracy. We're in the greatest nation on earth, actually. So I wouldn't want to live in America under Trump or under Joe Biden. I wouldn't want to be living in Germany under the European Union's rules and bureaucracy. I wouldn't mind living in Germany if it's just Germany running Germany, I think, but none of them are as good as Great Britain.
Yeah. Well, that's nice. That's a lovely note to finish on, David. And just as five people who live and work in the northeast as well. I know we've got viewers and clients from all across the country and further beyond as well. But it's nice to see the north, not just symbolism, but getting some actual money and some resource behind it as well. And I noticed Rishi and Boris, the first thing they did yesterday after the budget was to come to the Teesside. That was their visit yesterday to what will be the Freeport. But as you say, Neil, Treasury and Darlington, all that kind of stuff. It's good for people to get out of London and come and see and meet, real people and business people in the north. And that's, it's not just symbolism. It's a bit of that, but there's, as you said, David, some intent behind it as well.
He needs to stop that nonsense up there. He needs to. They've got to be proactive. You can't just keep, a bunch of socialists who will make people incredibly poor, because it's just not the population there. They do need to do this. People love them. Yeah, you're going to get some idiot spitting on you or doing that. So what? You're a politician. Grow up. That's what you went into politics for. But the Scots, and if they were ever to go to Northern Ireland, people, they need help. They need that reassurance. You only go to Wales to get beat off the rugby team. But you can go there. Lovely people are people. People are exactly the same throughout. Great Britain or United Kingdom. They're the same in Ireland, actually. We've got most people have got Irish blood in them in any case. So this is a nonsense when it becomes political, and you allow a particular political party or faction to divide you, because, yes, the bulk of English people, 30-odd%, I saw in the poll, aren't bothered what happens in the breakup. Well, you will be, because actually all of us will be worse off. You will be. Right now, parts of the United Kingdom are generating more income for the United Kingdom than other parts. But that wasn't always the case. That won't necessarily be the case if you centralize something, so everything's in just one spot. Of course, for a period of time, you get tremendous growth. We can see that. That's why True Potential's funds aren't like that. Okay, you've got recent funds which have gone wrong. That's what that person was doing. He was thinking, I'll do all this to get my performance up so I can sell more based on performance. We don't bother with that. We want people to get better than average growth rates over the medium to long term and be able to sleep at nights. That's diversification. Same with Britain. It's the same rules. It's a rule of nature. If you focus everything just on one square mile, of course you've got, and just on the outside of London, and that people have benefited from that, and they think it's them. It's not. You've just been lucky. You have two institutions there. You've got Westminster, so you've got the politics, and you've got the court of Queen Elizabeth and all the rest of it there, and you've got financial services. And the spin-off is why London and the Southeast are doing well. It's not because they're particularly better, more talented. Yeah, you will attract brighter people into that. But if anything at all goes wrong, and it does, you can see, anything at all goes wrong, then you absolutely hit harder than you needed to be. The clever thing to do is diversify throughout to up to a certain size and be as open as possible to trade. Open as possible to trade. All great empires forget that in the end. They go around bullying people and waving big sticks and spears at them and shooting them and all the rest of it. What stops that is trading with those other human beings. And our funds are set up on that basis, Peter. We are diversified. Of course, we could possibly from time to time get 20 or 30 or 40% growth, because some of our stocks inside those funds are getting that, and some of those stocks are getting 1 or 2%, right? Yeah. At the same time, and some of them aren't even stocks and shares. Some of them are currency. Some of them are different kind of assets. Well, you can see it for yourselves. Stanley says, go on here onto this and have a little look. Go and check out the thing. I wouldn't say you've got plenty of time in your hands. I've had plenty of time in my hands lately, which is I'm be pleased to get back to work properly.
I've made a note there, David. I think your point about the United Kingdom and different parts of the Union. I've made a note. We should do a podcast where we get. Well, you've got a bit of Welsh in you, so you could be the Welshman. We're going to get George Peebles on for the Scot, Earl Glasgow, and we can get any one of the others who could be the representative from England. We'll have a good ding dong one day about the Union.
I don't want to sound
horrible, for another day.
I've got no Welsh in me. I was born in Wales. Somebody abandoned me into Wales, so I was only there a few weeks, just enough to get the train ticket out. I do have a little bit of all sorts in me, but I don't think I've got any Welsh in me. Nothing against my Welsh fans, I will.
We'll find somebody, no doubt.
I do support Wales. I do support Wales rugby team, but only when I'm in Wales.
That's another whole different topic for another day. Yeah. But look, I think we'll wrap it up there, because I think we've covered it all in quite a lot of detail, the good, the bad, and the indifferent. So thanks very much, Neil, Daniel, Mark, and David. And if you thanks also for watching. If you missed any of the detail on the budgets, you can go to our website. There's a blog there with all of the main highlights, and also some more videos on the YouTube channel that you can watch to get the full lowdown as well. So thanks very much for watching. Join us again next week. Just subscribe to that YouTube channel and keep in touch with all of our videos about how we do more for you and do more with your money. So thanks for watching. It's bye for now.
Subscribing to the True Potential YouTube channel is quick and easy. Simply go to your YouTube app on your phone, type in True Potential and press the red subscribe option. You'll then be notified as and when new videos are released.